We are on day 3 of our PDAC marathon here today, and we are opening the festivities at our podcast booth here in the North Building with Cleantech Lithium CEO Ignacio Mahech. Ignacio, welcome to the show.
Thank you. I'm very happy to be here with you today.
It's great to have you, and of course, lithium is a big deal. Chile and South America in general is pretty interesting these days. So what brings you to the conference? How is your PDAC so far? I assume you've been here before.
Yeah, well, PDAC is the most important mining fair in the world, so we're happy to be here, meet with investors, shareholders, just share a little bit more about our flagship project in Chile. You know, the advances that we've had over the past year have been important, so we're here to share and, of course, to meet with the whole environment of mining companies and investors around the world.
Okay, excellent. Now, you are would you call yourself a lithium mining company?
Yep, for sure. Yeah, that's what we are.
Okay, excellent. And it's quite interesting what happened with lithium at $8 there just a few months ago, probably 6 months ago, a kilogram. And now, I haven't looked this week, but we're above $20. So I guess lithium's coming back. What do you think?
You know, I've been in this industry for a while already. It's almost 9 years. And I've seen a few already different events happening in lithium. When I started in this industry, lithium was less than $6 per kg. It went up to 15. Everyone said, that's crazy. It's the highest price we've ever seen. Cannot be sustained. Then it went back to 8. Then it went to 80. Then it went to 8 again. And now we're, as you say, above 20. So it's just the nature of the business. You cannot really forecast price going forward. What you can do as a mining company is make sure that you have a project that is in the lowest cost quartile to make sure that the fundamentals are right, and that's what we're focused at doing. Developing a project that can be run through the cycles, ups and downs, and is lucrative or profitable all the way around.
Okay, excellent. Now, we hear a lot of things about supply. I feel like on both sides, in a sense. Some people will say there's no shortage of lithium, there's lots of lithium out there. Other people will say, with all of the demand that's going to be coming into the market for batteries and everything, that there's not going to be enough. What's your sense of the lithium market?
Well, the demand keeps growing significantly year after year. We've seen companies like SQM say, I think it was yesterday or the day before, that they forecast demand will grow 25% in this year, 2026. So every year it gets more difficult, in my opinion, to meet demand because new supply makes smaller difference overall. A few years ago when demand was below 1 million metric tons, a new entrant with, let's say, 50,000 metric tons made a difference. But this year, next year, when demand is 1.5 million, 2 million metric tons, new 50,000 metric tons will make a little difference. So I, at least personally, I am, of course, very bullish with lithium, and I believe that going forward, it is going to be difficult for supply to meet demand.
Okay, excellent. And so you are based, or your project is based in Chile. Tell us about your project. How long have you been working on it? I mean, you were and we were discussing this before the show, Americans will pronounce it Albemarle, but in Chile, it is Albemarle, which is how I've been pronouncing it, so I was relieved to hear that.
Yeah, it's always been difficult to say the real name of the company. In Chile, we say Albemarle because in Spanish it's much easier to pronounce, but the real name is Albemarle. I spent 7 years working with them in Chile, finally ended up leading the Chile operation and also in charge of developing projects in Argentina. And I joined Cleantech almost a year ago in April last year. The company had been operating and developing the Laguna Verde project for much longer, around 6 or 7 years. And I joined the company because I believe we have the true opportunity to become the next producer in Chile. As many people have heard, producing lithium in Chile is not very easy. There are only 2 companies that have been producing for 40 and 30 years respectively, Albemarle and SQM. And now there's a real opportunity to bring up new supply. I believe Cleantech Lithium is very well positioned to be that company because of all that we've done in the past few years in exploration and project development, and also because we are very close to getting a contract to produce lithium in Chile that is called SEOL, Special Lithium Operation Contract. We believe we are just weeks away from getting that contract, and that will really enable us to start developing the project with environmental permitting and then project finance.
Okay, excellent. And how is Chile these days? I mean, it's getting hard to track everything, all the different countries, Bolivia. There's a lot of change, let's say that, in South America these days. How's Chile for working right now? Are you feeling good about it? What is the situation over there?
Yeah, well, I'm Chilean, and we are always very proud of rule of law in our country and stability. Those are, with geology, of course, our main assets. So we have good resources, but we also have very stable country that respects regulation and keeps regulation stable. We actually have a change of government next week. There was an election in November and December, the ballotage, and the government change is next week, but the government keeps working until the last day. Some people may be surprised, but for example, we have our Minister of Mining in PDAC this year, and she's leaving office next Wednesday. But they are working and, keeping the show, the lights on until the last day. So it's pretty amazing what we have as a country, especially, in this broader Latin American context.
Indeed. And so as we wrap up, Ignacio, what's top of mind for you? What do you hope to accomplish, say, at PDAC? What's top of mind for you right now?
So what we really wanted to do here is to let people know about the state of our project and the milestones that are coming, because this year is going to be very important for us. First, the contract, the special operations contract that we believe we're going to obtain very soon. Shortly after that, we'll deliver our pre-feasibility study. It is done. So we'll publish it hopefully mid to late March, and then we'll start with the process of looking for a strategic partner to develop the project. And I believe we can finish that process this year. At the same time, in parallel, begin the environmental permitting process, so we have the ability to start building a meaningful new supply for lithium in Chile by the end of the decade and start producing by the end of the decade.
Okay, excellent. And just finally, on the permitting side of things, are you seeing the same urgency in Chile that we're seeing, say, even in Canada right now, or the United States? Europe's trying to speed up the permitting. Are you seeing the same urgency in Chile?
Yes, exactly the same. I think there's a global awareness now about not only the importance of minerals, but also the importance of bringing them online faster. There's been a lack of investment in the past years in new projects. Also, there's been, I think, a lot of opposition to mining, and that's changing significantly. In Chile in particular, for example, this government that is leaving just passed a law that is supposed to expedite permitting by 1/3. All the sectorial permits are not going to allegedly be faster, and the new government that is coming in office has also the idea to expedite environmental permitting even further and to put mining as a priority for the next years, because they realize the opportunity that we have as a country with the critical minerals that we have, lithium, copper, and others, to become even more meaningful in the global scenario.
Yeah, now is not the time to act slow, is it? It's time to get going. Okay, excellent. Well, thank you for stopping by the booth. Ignacio Mahech, Cleantech Lithium's Chief Executive Officer. Thanks for stopping by.
Thank you, a pleasure.
And so our PDAC coverage continues here, and we have a very special guest coming up with Vale Base Metals CEO Shaun Usmar. Shaun, welcome to the show.
Adrian, good to be here.
It's great to have you, Shaun, and it's great to meet you in person. Of course, Vale Base Metals is such an interesting company. Many people have heard about it. Of course, many people have heard of Vale. So I'm curious to just hear about, the relationship between the two companies, how Vale Base Metals came to be, and just educate ourselves on the company. But first, how's your conference going? How are things going?
Yeah, it's what a difference a year makes. People have more smiles than I remember this time last year, and it's funny what generally favorable pricing will do. But yeah, it's great. Always manic, as you'd imagine.
I felt the same way. I imagine you've gone to quite a few PDACs in the past. And of course, so you remember those days in 2016, 2015, when sentiment was falling through the floor there. So what a difference a decade makes, I guess, right?
Absolutely.
Okay, excellent. Now, in terms of what I was discussing there, how would you characterize Vale Base Metals and its relationship, say, to Vale? Tell us a little bit about Vale Base Metals.
Yeah, so look, for me, I actually came to Canada 20 years ago when at Xstrata we took over Falconbridge. You may remember that in 2006. That was around the time Vale bought Enco. You remember the whole Vale Inco combination back then that ultimately never happened. So that was the genesis. So if you think of Vale-based metals, a large part of it, certainly the Canadian legacy, Indonesia, Japan, Wales, the sort of nickel-centric part of it hails back to the Inco days. Same with Thompson and Port Colborne. So think of that as a vertically integrated global nickel business that has a lot of byproducts. Sudbury, for example, the big nickel, we produce about a third of our revenue now is nickel, but the rest is, copper, cobalt, PGMs, and so on. And then there's some ferronickel down in Brazil at Onça Puma, and we also have a very large copper growth portfolio as well as operating assets down in Brazil. The flagship down there is Salobo. To put that in context, last year we did 219,000 tons of copper there. It was a new record with nearly 400,000 ounces of gold, and it's over 20 years of life, and it's still open in pretty much every direction. We also still have a residual stake in PT Vale Inco in Indonesia. Remember, our forebears built that over half a century ago. And we have a very large project. We won an award at PDAC last year for Huhu, which, think of that as sort of 50 years of over 300,000 tons of copper, 300,000 to 400,000 ounces of gold. And that's a project. We finished the PFS, and we're looking to see, what's the best way to extract value and get that developed. We're advanced on that. So how I came to this, I've been in the industry for more than a minute. I've been in companies like BHP Billiton, Barrick, I was CFO, Xstrata. I built a company here called Triple Flag. And I came to this when Vale decided that the base metals business was not flourishing as part of a diversified Vale. So they carved it out in 2023. The Saudis via Manara bought a 10% stake around then for, it was about $2.6 billion for their 10% stake. And so that's really the ownership today, is 90% held by Vale and 10% really held by Manara. We have a separate board and a separate setup in London, and our team is primarily out of here as well as in Brazil. So that's it. And the whole idea that made this super compelling was, it's not often, and most people don't really understand what VBM or Vale-based metals is, because it has been more obscured in Vale's portfolio. So at a moment when the world's waking up to its vulnerabilities and the opportunities on critical minerals, to have a portfolio of this nature, which is not flourished as part of the broader Vale, hence the carve-out, to daylight that value, to create that opportunity growth and make that visible to the market, possibly IPO it, and then create a platform where you can actually perhaps build, like we did at Xstrata, a much bigger critical minerals platform. It's an exciting journey. So that's the idea.
Indeed. Timing is everything, isn't it? And it's a wonderful time to have copper projects. So would you say then, in that regard, is the focus more about developing those projects than, say, trying to find, we see in the headlines, companies trying to acquire more? As far as you can say, is it more, would you say the focus is developing these projects? Is that fair?
Maybe it'd be helpful for me to just give you a step back on how the last year or so has gone, and that'll lead into that.
That'd be great.
So it's been 15 months, and the real focus was, how do you get a business then to turn around and perform and daylight that value? And it starts off with a business that had struggled to hit guidance and had projects that had been studied for many years but not really executed, and a business that was consuming a lot of cash. And so very early on, we did a massive restructure of a very centralized business into a more decentralized one, took out more than a third of our global overhead. At that point, you could see, let's put that in context, the cash improvement on that just in 2025 was about $460 million. And the nickel side, as a subset of that, was about $250 million. So the point is to make this globally competitive with the Indonesian oversupply in nickel, to unlock the performance in copper. First thing you have to do is you've got to actually deliver on guidance consistently. You have to have an organization that is ready to perform and is set up to do that. And so it was reorienting the operations, helping them understand where their dominant constraints are, how they can improve productivities, utilization, availability, generate cash and value. And that the center then is focused more on the things that, appropriate levels of policy and strategy, innovation, things you don't readily replicate at a site. But at the same time, making sure that we don't overburden the assets and that we're very commercial in our execution and that we manage risk well. So that has been extraordinary how this team has responded. I thought it would be a 3-year turnaround. To put it in context, year on year, we're about $2 billion cash flow better. clearly price has helped, but from the beginning of the year to the end, that's about a $900 million cash improvement, and 60% of that is controllables on cost, volume, capital improvements. If you look at the end of the year, we went from in 24 about 1.3 billion in EBITDA. Last year we did 3.3 billion. And if you look at our guidance this year and you look at the current numbers, we're looking at cash flow of over $1 billion of free cash, where the Canadian side is still not at break even, and we're pushing and we've made massive improvements. And the Brazilian side, as you'd imagine with copper and gold, is really doing very, very well. So in Canada, last year across the portfolio, we had great safety performance. We exceeded guidance for the first time in really the last decade or longer, certainly since Vale's owned the business. We lowered cost guidance in Q3. We beat that. It was very pleasing to see multiple records at assets. So we ramped up ahead of schedule at Voisey's in Newfoundland and Labrador, and we were able to fill Long Harbour for the first time and achieve record production there. Sudbury, we hit 5 million tons of Clarabelle. We got 6 mines there, mill, concentrator, smelters, refineries. And that allowed us to dilute those fixed costs, which we'd already lowered, to improve the cost competitiveness. The last time we hit that throughput was 2016. So really substantial improvements. In nickel as a whole, we're year on year, all-in cost was down 27%. Our copper all-in was 77% year on year. Records at Salobo, Sossego, best numbers since 2022, and also about a 40% improvement in our mining unit costs, which has really helped extend the life there. The projects we fundamentally restructured, we're looking to double from 2024 to over 700,000 tons, primarily in Brazil. A lot of that is really more brownfield. It's a regional hub and spoke sort of approach. Our first project we just got licensed at the end of January was over $500 million investment. We've now essentially halved that capital number. The IRR has gone from kind of mid-teens to over 60%. Our next one, and that should come in early 2028. The next one is a coarse particle flotation at Salobo. That's a mid-teens return. We lower capital again. Sorry, over 50%. It was mid-teens. And then the first large one we have is Alemão at the end of the decade. 21 years of 80,000 tons of copper per annum and 140,000 ounces of gold. We've changed the mining method. We've taken $500 million of capital down. The first half of the life or more is going to be input tailings disposal on a brownfield site. So there's a far more commercial, higher return, more accelerated approach, and we've massively ramped up exploration there. We've gone from 8 drills turning in para to 23 last year, 20 or 30,000 meters to 60. This year we'll do 120,000. And there's just so much copper just below the sort of focus previously, which was more shallow open pits. We're finding incredible intercepts, and we'll talk about more of that at our Investor Day at the end of this month. We'll be publishing technical studies and really helping the market understand this strategically interesting nickel business that's served our allies for over 100 years. 95% of all the nickel in World War II came from Sudbury, from our operations.
Oh, you're kidding.
It's crazy. We do about 60% of the US aerospace and defense supply, and it's really a multi-generational, reliable supplier for the West and certainly for our allies. And then in copper, we have massive growth that the market doesn't see, and our job is to really unlock that while we continue to perform and deliver growth.
Interesting. I mean, with nickel, it seems like it was a tough couple of years in that market. I mean, we saw a lot of mines closing down, I think a couple in Australia, if I'm not mistaken.
Yep.
So I suppose, to your point, it was about keeping costs down, right? Because nickel was cheap, right? So you feel good about how that went for you.
I view it as a work in progress. So yes, I'm proud of the team. I mean, to see that level of turnaround in such a short time with a group of people that are energized and inspired is very gratifying. We do say though, if you've been mining in Sudbury for over 100 years, and we have the endowment maybe for another 100, but on our watch, we've got to explore well, we have to be productive. It's not just writing checks. So the focus there is, if you're vertically integrated, you have to have the mine feed with the right margins to feed and fill your facilities in the middle and downstream, so that frankly you can dilute the fixed costs in those facilities and make them competitive through the cycle. That's the future in the Canadian polymetallic part of the portfolio. So Voisey's Bay, Long Harbour, all our assets in Ontario, in Southern Ontario and Northern Ontario. And the idea is for us to be able to make sure that those are in the low half of the cost curve. So we are pushing for a business that consumed a lot of capital and a lot of cash. We are 0.36 times net debt to EBITDA now, massive improvement. We're self-funding. But in our Canadian story, we've got to hit cash flow break even and then go beyond that in the year ahead. The nickel price has improved, but that's the last few months.
Yeah.
We have to maintain that discipline and maintain that sort of edge that we need to make sure we can compete with whatever China and Indonesia throw at us.
Yes, what a challenging market. So it sounds like things are trending in the right direction
They are.
there. And so help me characterize the company then. So we've heard about copper, and this sounds like this is where some of the growth will come from, I guess, from the company. You have these established nickel assets. And so are there other base metals, for instance, at Vale Base Metals, that you are coming out of this production?
The short answer is yes. So, look, firstly, everybody loves copper, and for a sector that has struggled to deliver, certainly projects on time and on budget, our focus, therefore, is operationally. I think we were one of only two of the sort of intermediates and seniors that exceeded guidance last year. I think the sector was about 6% below on what it said it would deliver at the start of the year. So the first order of business is deliver reliably, and those assets obviously have a lot of gold byproducts. We have a little bit of silver byproduct in there as well. So both the Brazilian and the Canadian story, we did last year about 90,000 tons of copper in our polymetallics in Canada. So yes, we think of Canada, we think of nickel. Thompson in Manitoba, you may have seen we announced a couple of weeks ago a consortium with Exaro, Canada Growth Fund, and Orion Mine Finance to take a non-polymetallic ore body where we've been busy in that region for over 60 years, give that a new focus, another $200 million US of capital to make that competitive through the business. That's part of our portfolio focus. But the rest in Sudbury primarily and in Voisey's Long Harbour is polymetallic. So even though we think of nickel, we produced roughly the same amount of nickel and copper last year in Sudbury, 90,000 tons, give or take. We also produce a fair bit of cobalt and PGMs. So that's the focus. I think those diversified revenue streams with a cost-competitive, capital-efficient business that has really been the cornerstone of those communities for generations, making that robust is really the focus. And then we have refineries in Wales as well as in Japan. A lot of that is fed through offtake from our PTVI investments in Indonesia. And then in Indonesia, we've got a front row seat to obviously a lot of growth. And, I mentioned Huhu, but, there's obviously copper as well as a lot of gold, and both of which the market seems to love these days.
There's so much to keep track of.
It is. It's a big portfolio.
Yeah, indeed. And so as we start to wrap up here, Shaun, what's top of mind, and in a sense, as you deal with all of this, where is this going? Where do you see things playing out?
Yeah, so look, the enticement for me, as I said maybe in the beginning, was the chance to take an iconic platform that was really almost invisible, get that to perform with an incredible team of people, look to possibly IPO that, and then create a broader platform for critical minerals in this moment. I built my last company from scratch at Triple Flag, and we IPO'd it after 5 years, and it's gone on now. It's over 11 billion Canadian market cap business. And a lot of that was making sure that my founding investor there had choice. So we ran the business early on with the idea that we would IPO it, but the point was my owner had the choice to continue as a private business, to combine it with another one, and so on and so forth. But the focus that comes with looking at it from an investor lens, with an IPO lens, helps you in all those scenarios. You have to focus on risk, you have to focus on how you unlock value and optionality in the portfolio and streamline and optimize the portfolio. And that's what we're doing. So we are accelerating. We're about 2 years ahead of where I thought we would be. And our focus is, one, to be as resilient in the face of this geopolitical uncertainty that we're facing, take care of our customers, continue to grow value, and make this portfolio as robust as we can, and accelerate to an IPO readiness state in sort of the middle to the back end of this year. And then my owners have choice between Vale and Manara. They love the copper business in particular. They may want to continue doing that indefinitely. They may want to IPO it. They may want to just be patient. So the discipline and the focus on getting our organization to continue the momentum we've demonstrated, deliver every quarter, unlock that value, show it to the investing public out there, and then give them a choice. So that's the journey, and it's an exciting one.
And you recently did a deal with Glencore, Shaun. What happened there?
Well, look, we announced late last year that we have a framework agreement in Sudbury to take the really exhausted infrastructure and ore bodies that Glencore has in Nickel Rim South, which We actually built an extracted nickel in 2007, 2008. It's the best shaft infrastructure in the basin, but they've mined it for years and their ore body's largely exhausted. So the idea is to utilize their infrastructure and our contiguous ore body. So extend that shaft by, say, 700 feet, drift across to our copper-rich ore bodies, and to be able to extract that. So we're working together, 50-50 JV. We have to cement that. We're going to finish our FID studies really ideally early next year, and then hopefully look to unlock that. And that on a 50% basis at the moment is just over 20,000 tons of copper and about 40,000 tons of copper equivalent, given there's nickel and PGMs and others in there. So I think it's an example of what we need to do more of in this industry. I came to Canada, as I say, in 2006 and worked at that time on synergies in Sudbury as the CFO of Extracted Nickel, where at the time we had about $500 million of opportunity if we could combine the synergies that existed between the former Falconbridge and Inco. And unfortunately, it just never got off the ground. There were so many multiple attempts. We eventually just did some boundary swaps. So after 20 years or more of false attempts to get to this moment, to create value that neither of us can actually realize on our own for our owners and for the communities, I think is a very important milestone, and I hope will lead to other possibilities in the basin, because they do exist.
Okay, excellent. And just finally on the conference here, what have you learned? What do you hope to accomplish here at PDAC?
It's an interesting one. You know, on the one hand, clearly there's a mood of optimism. I think the societal necessity of what we do is coming into stark focus in this moment, and that can't feel good, and for certainly people who've been long suffering in the industry for a long time. But yesterday we hosted a panel with Dan Jurgen at our offices, who just wrote the S&P Global study on copper demand. I think it's providing a much needed spotlight for policymakers, for governments and others who don't understand how long the timeframes are in this industry and how broken this ecosystem is. And I think I'm seeing more of those conversations, more the inside. It's not just about writing checks. We need that too. But we need more engineers, we need more artisans, we need more people who are going to build mines and facilities, because it has atrophied for so many years. And I think there's an exuberance at this time. I think there's huge opportunity. We need to attract more talent into this sector. But at the same time, I think the timeframes here, and I think people are starting to see this, the need for us to partner with government, with communities, with other technology providers. AI is obviously being thrown around a lot, and there's so much opportunity, but we have to work together to find a way to accelerate and to unlock value, because the gaps that are emerging, and that study I mentioned says 10 million tons of annualized copper production by 2040. They don't know where it's going to come from. The challenge is real. And it's a moment of incredible opportunity. It's an exciting moment, but boy, we've got a hill to climb. So that's what I'm feeling at this conference.
It's, you characterize it beautifully, the urgency and the challenge, really, of this moment. Well, thank you, Shaun Usmar, CEO of Vale Base Metals. Thanks for joining us and stopping by the booth.
Adrian, thank you. Great chatting to you.
Our PDAC coverage continues here with Dan McCoy, President and CEO of Eminent Gold. Dan, welcome to the show.
It's really nice to be here. Thanks for having us.
It's a pleasure. And so I imagine you've probably been to a few PDACs at this point. How are you feeling? How's your conference?
Oh, I've been to quite a few PDACs with the company that and Bebek and myself have ran before, which was Keegan, which is in Africa, and then Caden, which was in Mexico. I used to do a lot of core shows here. Matter of fact, Ivan helped me haul core through parking garage once. So.
Oh, that's hilarious. The pragmatics
right.
of the core show. You just think it magically appears.
Yeah,
in
that's
the core
right,
shack
exactly.
There. Hilarious. Okay, so you're at Eminent Gold, and so maybe just tell us a little bit about the company. What are you guys up to? Do you have a main project? Could you just give us the elevator pitch for us?
Sure, yeah, we're a Nevada-based company. We have 3 projects, all in Nevada, and the one we're focusing on the most is the one that brought Kinross in to invest in us, and that's the Hot Springs Range project. And it's a true Carlin trend. I mean, what we've proven that what we have is we have a really good structure, we have a really good host rock, and there's gold in that host rock, and then we've drilled under a small amount of cover and hit 9.2 meters of 3.2 grams per ton gold. And the geophysics and everything else here, photos, leads us to believe that we have about 10 kilometers of prospective ground under a small amount of cover. And so we think we may have discovered the first oxide trend in Nevada in the last 20 years.
That sounds like pretty big news. And I was just hearing from Ivan over here. You have breaking news, in a sense, with the Kinross. That's today's news, is that correct?
That's correct, yeah. So Kinross has agreed to expedite the exercise of their warrants, and that's really good for us because we don't have to raise any more money. So that's really fantastic. And, thanks to Ivan here, he was able to make that happen for us, and we'll have a lot more warrants coming in during the summer. They're all in the money right now. So it's really nice to be able to fund yourself using warrants instead of having to go and, beat the street down.
Yeah, indeed. It's nice to hear, there's about 10 years of sadness at PDAC, and so it's nice to hear the coin has flipped. So excellent. Okay, so where do you go from here with this project? In a sense, where are you? Are you drilling? Where do things go, say, in the next 6 months to 2 years?
We've accepted a bid from a reverse circulation drill company. We've done all of our previous holes with core, and now we have a pretty good idea of what we're looking for. And so we're switching to reverse circulation. And so we're going to have more news this year than we probably have had in all the years since we started. We're going to have a lot of news flow, a lot of holes coming out. We've got some geophysical programs we're going to be doing. We're going to be drilling a second target that we haven't drilled before. And so that's going to be very exciting too. So I think this is going to be a year to really watch us and to really pay attention to what we have going on.
Okay, excellent. And just in terms, you said you were in Nevada, right?
That's correct.
So are there projects nearby? And I assume the infrastructure, Nevada's always had a great reputation for mining. Can you tell us a little bit about, what's around you?
Yeah, well, it's interesting. Where we are is about 15 kilometers northwest of Turquoise Ridge. And for those of your listeners who don't know the Getchell trend, there's about 50 million ounces of endowment there, past production, current resource and reserves. And what we are looking at is we're looking at a very similar geologic setup. But of course, the wonderful thing is they have everything that we need already very close to us as far as energy, as far as anything you could want to build a major mine.
Okay, excellent. And finally, what is your message to investors? Put it all together for us. What do you want them to know about Eminent Gold?
I would say the thing to know is that we've kind of taken the hard part and the risk out of it with our first drill hole. So it was a ways to prove up that we had the geologic setup that we were looking for. And it took, a couple of years of hard work and surface work and geophysics. Now's payday.
Fun words to leave on. Dan McCoy, President and CEO of Eminent Gold. Thanks for stopping by the booth. It's great to meet you.
Great to meet you too.
And our PDAC coverage continues here on day 3, and what a wonderful guest to have at PDAC is the Prospector and Developers Association of Canada's Jeff Killeen, Director of Policy and Programs. Jeff, welcome.
Thank you very much for having me. I appreciate that kind intro.
You're welcome, and thanks for having us here. We're delighted to be in the podcast booth here for 3 days of the convention, and we've been having a great time over here and a lot of fun face-to-face contact, which I guess is what this conference is all about at the end of the day.
It really is. 94 years later, we're still an entity, and that's a big reason why, is because people want to see each other. When you're talking about deal making, when you're talking about really interesting or complex things like geology, people want to be able to meet. They want to be able to talk to each other face to face. This is the number one place to do it for almost a century. So this year, like no other, yes, we got a great crowd. We're going to have a great year here at PDAC 2026.
Indeed, it's been a lot of fun. As many people have commented, the mood is good. We had some tough years in terms of the mood with the sentiment and just with mining stocks struggling in the teens, so to speak. So it's fun to watch the whole cycle kind of happen and the upbeatedness. So what is your sense? First question I'm kind of curious about. I don't know if you guys have the numbers yet, but how is attendance? It feels like it's going to be over 30,000 this year, which is pretty impressive.
Well, this is more than 20 years for me. So in that time, I've learned the number one way to gauge the convention is by feel. So walking around the building the last few days, it feels great. This building is breathing, it's vibrating almost in a way. And that's a sign for what the crowd is like, what the number will be like. But to be honest, we don't disclose that to the end, and that's for a reason. over half the people that come to the show register on site. So we're not trying to be cheeky and hold that number back. It's something that we learn over the course of the 4 or 5 days of our convention, what that number is going to look like. But all the metrics leading into this year, we have the most exhibitors ever, we have the most floor space ever. All the metrics in terms of registrations were ahead of what we were anticipating. So this year looks great. The final number will probably come out Wednesday afternoon, and it's going to be a great one.
Okay, excellent. Is there anything else on the convention that you want to mention? We've talked about the mood. There's a great energy out here for sure. Is there anything else about the convention that you want to point our attention to?
Yeah, just as I pointed out a moment ago, it's the biggest ever. From a floor space perspective, we've never been bigger. We're the entirety of the north building, the south building, the most exhibitors we've ever had. So that's a sign of what's happening in the industry, kind of what you were hinting to. We're seeing a lot more investment opportunities come to play. We're seeing those come as a result of strong commodity prices. We're also seeing more different types of companies and different types of countries coming to the venue that maybe weren't here before. And that's also, I think, a sign of the times of what the world is talking about when you think about minerals.
Indeed. I was talking to Philip Mackey the other day, and we had him on the podcast, and a well-known metallurgist, and he was saying he gives an annual lecture at, I believe it was McGill, and he said there had never been more students attending his lecture than this year. So, you see a lot of young faces here too, so it's quite interesting. Now, in terms of PDAC, or the PDAC does a lot of advocacy. I guess, are there many government, we've been seeing some politicians here, just nearby us actually here at the booth, giving speeches. Is PDAC advocating for anything to government officials in 2026?
Yeah, that's our job every day of the year, really, Adrian, is to speak to our federal government on the issues that matter for our members. So we're a consummate voice. We're always speaking to government as best we can. This venue here this week is a great opportunity for those folks in government, whether it's from our federal government, provincial, territorial, or governments around the world, to actually see how the industry works, to be able to talk to folks that are working on the ground. So it's not just us at the PDAC team who are really knowledgeable. We know all the research, we do all the science of how this works, but to actually see what it looks like on the ground. So it's great to have a lot of parliamentarians here from the federal government. We've got lots of folks from the cabinet and from ridings around the country. They're actually getting to talk to folks that work in those ridings and what the industry looks like, so that when we supply those words, when we're advocating PDAC on behalf of the members, they know it comes from real substance. So yeah, we're trying to find the government's ear on making sure tax incentives have long runways, so that if you're investing in mineral exploration, you know what the fiscal regime will look like in 5 and 10 years from now. We're trying to make sure the government pulls out all the stops so that investors in Canada, retail investors, can reinvest capital into the sector, because we know even though markets are strong right now, commodity prices are strong, the amount of penetration of capital down into smaller market cap companies, that's always a constraint, that's always a barrier, and that's where we play a big role at PDAC, is trying to make sure we can open up those barriers, making sure that capital flows down chain.
Yes, it's been top of mind for governments around the world, and this is one of the big bottlenecks, in a sense, is exploration, not getting the funding that it needs. So are you seeing this changing at all? Do you have kind of hopeful signs that you're seeing when you have these conversations, when you see the presentations at the conference? How are you feeling about exploration and where this is trending?
Great question. What I said to the crowd at the opening ceremonies is we're pragmatic optimists, and I truly believe in that. Explorers, miners, we are pragmatic, but we're optimists, and so I'm optimistic for sure. And if you look at what's happening on the ground in Canada in 2026, there's reason to be. We will see over $5 billion spent in mineral exploration in Canada this year. That's the highest number I've ever seen in tracking these figures for decades. So that's a good sign. We're seeing over $2 billion spent in gold exploration in Canada. So we can see that direct response to strong commodity prices in the market fueling that interest on the ground. So there's reason to be optimistic. Canada's exploration marketplace is really, really frothy and really, really active. But again, there are still corners of this market that are struggling, corners of the market like in the critical mineral sphere that maybe are harder for the average investor to understand, where incentives do have to get stretched, where we are really being a champion to try and see that capital flow.
Okay, excellent. And finally, just on permitting, how are you feeling over there? I mean, it was a refrain when I would, interview exploration companies for years now. That was always pretty much at the top of the list, and it's almost like beyond Canada. What are you seeing in terms of permitting? Are you seeing progress in that front?
We definitely want to see progress. I think it's pretty plain to say, looking at research, Canada doesn't rank well. If you looked at all of the projects that are out there, 25 or 30 years to develop them. But it is possible. We've seen projects in Canada built in less than 10 years, moving through the regulatory track as they can. It's really taking away the layers, the unnecessary layers that exist. So making sure that provincial and federal processes work in concert rather than in conflict. The idea of replacement or exchange of federal regulatory processes for provincial ones makes sense so that we're not duplicating those requirements and slowing projects down. So there are ways we can speed things up in Canada without necessarily putting conservation or biodiversity conservation at risk. So there is a path forward, no question.
Okay, excellent. And finally, do you have a message for attendees of the conference? Is there anything you want them to know about the PDAC and what you guys are doing? What's your message to attendees of the conference?
Be a member of PDAC. I started my career on the floor of this convention several decades ago as a student geologist that's worked in the industry in a few different capacities now for a number of years. Our members are some of the most important things in the world, to us and I think to the world, because they give us a voice. So being a member of the PDAC, coming to this convention, not only does it give opportunities to the members to be able to interact with each other and network and be able to facilitate deals, do all the things that happen here, but being a member adds fuel to our fire. It gives us a bigger voice, and the bigger voice we have, the more we can pay back to our members when we speak to people in Ottawa. So that's my call, is be a PDAC member. And hey, you know, the fun part of that too is you can actually get into the convention cheaper if you're a PDAC member. So there's a good reason to be.
Good incentive all around and great advice. The PDAC's Jeff Killeen, Director of Policy and Programs, thanks for joining us and stopping by the booth.
Thanks so much, appreciate it.
We continue our PDAC coverage here on day 3, and I'm very pleased to welcome Managing Director and CEO Nick Erner of Alkane Resources to the podcast booth. Nick, welcome.
G'day, thanks very much, good to be here.
It's great to have you, and it's just so much fun meeting so many different people, really from around the world. And of course, Alkane Resources is based out of Australia.
We are, headquartered in Perth with operations in Australia and another mine in Sweden. Yeah, that's right.
That's great. And did you fly in to Toronto from Australia? Or?
No, actually, our mine in Sweden, up the north, Björkdal, in the north of Sweden, I went there first and then came via BMO down in Miami and here at the Red Cloud pre-PDAC event and now here at PDAC, and then I roll out through Vancouver. So a fair bit of time on the road. So yes. I think it's an around the world ticket. I'm not sure. Yeah.
Yes. It's the mining circuit. I was telling my brother in the first 3 months of the year. Okay, excellent. So for those who are unfamiliar with Alkane Resources, what are you guys doing? What are you up to? What's the company about?
Yeah, absolutely. So we're ASX and TSX listed, and with an OTC listing as well. And that TSX listing came about in the middle of last year. We merged with Mandalay Resources, who were listed here on the TSX, so people might recognise that. So as a result of that merger, we have 3 mines, 2 in Australia, 1 in the state of New South Wales, about 4 hours west of Sydney. It does about 80,000 ounces a year, been running for 10 years. The Costerfield mine in Victoria, it does gold and antimony, which many of the listeners will be obviously curious about, has for over 20 years. It does about 50,000 ounces. And in Sweden, the mine I was just at, Björkdal, it does between 40 and 45,000 ounces of gold. So all up, we're doing this at 160, 175,000 ounces and generating a lot of cash in this, market, as you'd imagine. So, it's obviously a good time to be in gold and, a pretty substantial business we're building.
Okay, excellent. So there's a project in Sweden.
Yeah.
And is there another one in Australia? Is that correct or no?
So 1 mine in Sweden, 2 mines in Australia, and a long-term development project in Australia as well. Yeah.
Okay, excellent. Yeah. And of course, Mandalay Resources. I remember that company from gold newsletters that I used to buy maybe 10 years ago.
Yeah,
so
exactly.
That's interesting. Okay, great. Now, at the conference here, what are you hoping to achieve? Are you looking to, spread the story of your company? What brings you to PDAC?
Yeah, it's a bit of a dual track, right? So Mandalay's had a booth here for many years, which now Alkane has taken over that spot, so to speak. So it is about letting people know we're here, we exist, this is what we're doing, this is the business. But as well as that, we look to continue to grow. And so part of being here as well is furthering the relationships about potential inorganic growth opportunities, mergers and acquisitions, if you like. Understanding, obviously there's a lot of serious worldwide banks here, and as well as that, there's a hell of a lot of great projects to go and meet and look at and understand a bit more than what you might as an investor, like what you might as a, if I was going to develop this, how might that work? What are some of the intricacies? And it lets you sort of shuffle and rank projects in your mind as well. So that's sort of a dual track purpose for being here.
Okay, great. And you mentioned there's production.
Yeah.
Now, is that primarily in Sweden, or is that across several of the mines? or
Australia,
projects?
we get roughly 130,000 ounce equivalent per year, and Sweden we get another 45,000 ounce equivalent per year. So I'd call it, a bit over 2/3 in Australia, a bit under a third in Sweden. Yeah.
And what are the costs on these projects? 'Cause
So
everybody
I'll
wants to do the math.
Yeah, I'll go to
in their head
US.
with
I'll
gold
go to
price.
US dollars for people. So the two Australian assets run at about a $1,600 US an ounce all-in sustaining cost. And across the group, we spend about 60 million US capital a year in exploration and growth. So that comes on top of that if people are doing maths. And then our mine in Sweden is a higher cost one. We're looking to ramp up production at the lower unit cost. It's about 2,800 US an ounce.
Okay,
So, yeah.
interesting. Yeah, it's kind of amazing how I was discussing this with someone yesterday on the show of how, the economics have changed in the precious metals business.
Completely.
All of a sudden,
Yeah.
$2,800, well, you're still doing quite well.
Yeah, it's nuts. I mean, with gold, we'll just call it 5,500. Who knows what it's
Sure.
going to be when people listen. But that's a serious margin still. Yeah. Yeah.
Indeed. And so as we wrap up, Nick, where's this going in a sense? What's the roadmap for Alkane Resources?
So a couple of different things. Part of the reason for the merger was increased capital markets exposure and significantly increased liquidity that lets larger fundamental investors as well as index investors come in. So we're through the ASX 300, we'll probably go into the ASX 200. So that rationale has really worked for us. We want to continue to expand the business. We've got some organic growth opportunities for ourselves. We've got a large, long-dated, plus 10 million ounce resource in Australia that we're working through the permitting on. But we really want to put another leg of business through a merger like we just did or an acquisition. And we look in Australia, New Zealand, Canada, US, and through Scandinavia. So let's say we're talking in a year's time. I'd love to have done some other type of transaction and grow at the same time as banking a quite serious amount of cash and then looking at those shareholder returns. So yeah, we really want to continue to grow the business because there's quite a lot of good money to be made for people that have a track record of getting it done.
Indeed, the team always is so important in the end. And finally, what's your message to investors, in a sense, put it all together for us? What do you want them to know about Alkane Resources?
I want them to know that we're an established producer that's been reliably meeting its guidance for over a decade. I want them to know that we're generating significant amounts of cash, particularly versus our peers. I want them to understand that we have a long-dated growth option with millions of ounces in it that meets the 5-year type growth plan, and we're looking to fill the hole in the middle. So we expect to continue to get both fundamental value revealed, but also show passive value for funds as well. And I think that's attractive, right? There's not that many people in this, what we would call Australian mid-tier space, but there's in the US, that Canada, the border between mid-tier and micro-cap, there's not that many producers in that space. It's a good chance to get some of that leverage without even going into antimony.
Indeed, and we'll have to save the antimony for a future conversation. Nick Erner, Managing Director and CEO of Alkane Resources, thanks for joining us and telling us about what you're working on at the company.
Thanks very much.
Well, what a delight, and this is the wonder and joy of seeing people in the flesh. And here we are at PDAC, wrapping up our final day here at the podcast booth. And who do we run into? We run into Rick Rule. So Rick, welcome to the show. Great to see you.
Pleasure. Thank you, by the way, for the Northern Miner reception last night. I had a great time seeing all the Northern Miner people, Anthony Vaccaro and everybody else. So thank you for that.
Well, they put on a good show, don't they? And it was great to see you there. And yeah, what a fun night that was. I think it's the second year they've done the Earth Labs reception there. So yeah, no, thanks for stopping by, Rick. I'm sure it was appreciated. And so, we were just discussing before we launched the podcast, you've been coming to PDAC since, I hope you don't mind me saying, since 1974. Here's a big picture question for you, Rick. What's changed?
Well, it's much larger. The PDAC in those days was held up the street in a hotel, and the whole PDAC fit in that hotel. My understanding is that the PDAC will have between 25 and 30,000 people in it this year. So first of all, the PDAC is probably an order of magnitude larger than it was. It's also much more sophisticated. Remember that the Origin, Prospectors and Developers Association of Canada, they had this conference when it was too cold to go up north, but before breakup. In 1974 and 1975, the conference was much closer to its origins than being the largest mining show on the face of the earth, which is what it is today.
It is the largest, isn't it? Like, I wasn't sure about that. It was mining in Daba, but it kind of feels, it's hard to imagine a bigger one.
The Saudi show may end up becoming larger than
Wow,
this one,
really?
but this is it for the time being.
Okay, well, we'll enjoy it while it lasts. So great. So now, I guess since we have a wonderful self-proclaimed speculator, I always love how you make that distinction, Rick. What's exciting you right now on the markets and metals? I mean, here we are, gold above $5,000, silver, going wild. I imagine it's oil, which you've been talking about for a few months now, and now we're seeing the fruits of that call. What's interesting you right now?
The problem is that even oil's caught a bid.
Yeah.
I like stuff that's cheap. The oil quote, WTI, has moved up from, $55 to $85?
Not as attractive, is it?
Needs to calm down a little bit. I've had, by my own count, almost 90 meetings here at PDAC, and I'm embarrassed to say, maybe I'm getting old, I haven't found anybody that I can write a check to at PDAC. There's a lot of competition here. There's some good deals here. There's some good people, but I'm not the first guy to them. They are not cheap. There's a lot of smart money walking around on the floor. There's even more dumb money walking around the floor. And the promoters, of course, prefer dumb money to smart money.
It is interesting, isn't it? In a sense, like, this is not your place. Like, when things are ebullient, so to speak, and the sentiment is quite, positive, that's not your kind of market, is it?
No, I try to make money on the delta between price and value. What I have been able to do, I'm old enough now that I don't go out and drink all night, every night at PDAC. I run back upstairs to my room and I write down the day's notes. And what I've been able to do is find some situations I thought were interesting, but I didn't like the price on. Every now and then, as we saw 3 or 4 weeks ago, you get these really precipitous price declines. And sometimes the market rebalances itself in my favor. If you have a shopping list, if you know what you want to buy and you know what price you want to pay for it, and you wait, sometimes good things come to those who wait. So in that sense, PDAC has been very useful to me. It's also been useful in the sense that an important part of my career now is mentoring. And I've had 2 different opportunities to address groups of younger people who are just getting into the mining business and repay some of the debts I owe to the people who did the same for me when I was in my 20s. And I find that very fulfilling.
Well, I imagine. Now, of course, we have this it's hard to avoid the whole story of what's going on in, what some people call West Asia, we used to call the Middle East, in Iran. And there is concern that the market is going to get a little wobbly here. Where do you hide, so to speak, in this market? How do you preserve your wealth under these circumstances when gold is trading above $5,000 an ounce?
I still buy gold.
Really?
I buy gold because I view gold as insurance. The set of circumstances that causes your insurance to pay off is invariably lousy. So I hope I lose money on my gold. But I save in gold. I maintain liquidity in dollars. So I'm still a gold buyer. Mm-hmm. And I have core positions, both investment positions and speculative positions, that I'm extremely happy with. I haven't really been a stock seller since October. I'm just having trouble adding new positions. I have very recently, like this week, been buying shares in 5 companies whose names I won't disclose. I don't want to compete with all the Northern Miners audience.
Yes,
but they have a couple things in common. They are oil and gas companies, which, although they're not hated anymore, aren't loved either. They're all involved in conventional exploration. The love is all around shale. Everybody wants to be in the Western Canadian Sedimentary Basin or Permian and shale. This is conventional exploration. It's deep water or offshore, which the market hates. And they're all in countries that most folks can't pronounce. So the market doesn't like microcaps. These are microcaps. The market's so-so on oil and gas. This is oil and gas. The market hates deep water. This is deep water. And the market hates countries they can't pronounce. These are all in countries they can't pronounce. I'm doing that with the understanding that this is hugely speculative. But I think the arithmetic is compelling. Seismically supported projects with producing analogs in the same basin and the same horizon. statistically have about a 1 in 3 chance of being successes, the wildcats. So I'm involved in 5 companies, each of which has a 1 in 3 chance of success. My penalty, because they're public, is if I fail, I probably get half my money back. But if I succeed, I get 15 or 20 times my money back. So arithmetically, out of 5 starts, I should get 4 failures and 1 success. If you talk about 1 success at 20 for 1 versus 4 failures, getting back half your money, that amortizes very well over time.
Indeed, and it speaks to the challenge right now, isn't it, to find value in a sense, or that extra value that you seem to want to find, right?
You know, in fairness, I've been investing in the sector for a very, very, very long time. I've been investing aggressively in the juniors this go-round since 2018. So my portfolio, in terms of portfolio sizing, I'm already full. I'm competing with people who may have been in the sector for a year, whose portfolio allocations are nowhere near as full as I. One could argue that given the outlook for resources for the next 10 years, those guys have to buy stock. I don't have to buy stock because I've been at it for a while.
Interesting. And so do you ever, with natural resources doing quite well, do you ever look beyond natural resources?
Yes, but only in industries I understand. When I was a young man, I thought my success as a resource investor meant that I was a good businessman, and I could invest in most businesses. I learned to my chagrin that that was not true. Because of my involvement in the natural resource business, I've come to understand financial services businesses. I built wealth managers, asset managers, I built an insurance company, I built a few banks. So outside of natural resources, I invest in conventional financial services, not fintech.
Right.
Not the latest, greatest whiz-bang deal, but old-fashioned blocking and tackling financial services businesses. And I'm very invested in that side, including, by the way, starting my own bank, Battle Bank.
Do you think, just on that note, is there something to be said for investing in boring?
It works for me.
Because this is what I often hear from the people who are compounding and who are doing quite well. They tend to have oftentimes what you might consider a quote-unquote boring strategy, or not.
Think about the analog to boring. I would describe that as terror. And I would prefer to be bored to being terrified. Warren Buffett's ex-partner, Charlie Munger, rest in peace, said that most money is made by sitting, not thinking. Every now and then you have the opportunity to employ your brain, you employ it, and then you do nothing for a very, very, very long time. In the same vein, an early mentor of mine, Jimmy Rogers, very instrumental in my early career, told me and told other people publicly that the game of investing is very much sitting in the corner of a room doing crossword puzzles or something worthwhile, waiting until somebody walks in the middle of the room and drops a pile of money there and leaves. Since most people don't believe that will happen, they never look for it. Your job then is to get up, grab the pile, go back in your corner, and do nothing for another 2 or 3 years until it happens again. A boring process, one that worked for Jimmy Rogers, one that worked for Charlie Munger, and one that, albeit to a lesser degree, has worked very well for me.
It's so funny. It's common sense, right? And for myself, I remember Jim Rogers on Charlie Rose when he was putting out, I think it was around 2004, he put out his commodity book, which probably got me first interested, actually, in this whole business. Hot Commodity, I believe it was called. And it's so funny, you can hear this very practical advice for decades. It still feels new and difficult to do.
Right. Well, I got to watch Jimmy up close as an investor, speculator. And what I always liked about him was his sell-side discipline. He would take a position when it was unpopular, and when it would be in favor, when everybody was rocking and rolling around the position, he would sell. And occasionally I'd say, just out of curiosity, why? He says, you know what? It's given me all I need. There may be more. I don't care. The reason I bought it came true. The reward I was looking for has occurred. If I don't take the money, I've not made the money.
I've been telling people about when I met you on the Vancouver Resource Investment Conference floor in January, and how you said, I'm not interested in getting the top or the bottom, but the big chunk in between.
Correct.
And I think I've mentioned that on 2 or 3 shows since. And so, to your point,
Bernard Baruch, the great trader, famously said, The only guy who ever bought at the bottom and sold at the top was a liar. It didn't happen. The idea is you take a big fat chunk out of the middle and you don't worry about somebody else.
It sounds like the pro move. So as we wrap up here, Rick, and thank you for your time, and it's wonderful to conclude our show with you. What do you hope to achieve at PDAC in a sense? Is there anything you hope to achieve? Maybe just learn about what's going on out there. How is the show for you? Talk about the conference for us.
PDAC is the largest gathering in the mining business of the year. It probably, in terms of meeting people and talking to people, saves me 100,000 air miles a year. At age 73, that's a welcome circumstance. It's very, very, very hard work. I've had a lot of meetings. Sadly, none of these meetings are likely to make me money in the near term. But they have allowed me to gain positive information, and they have allowed me to look at a couple of companies that I like that are at the wrong price. If they reprice, maybe I'll be able to take advantage. It's also given me the opportunity to break bread with old friends, to engage in a couple mentoring sessions with young people, which is important to me. All in all, it's been a positive experience.
Well, I have to say, 73, you look great, Rick Rule. So thanks for coming on the show and stopping by the booth. Again, it's a delight to have you on the program.
Thank you.
And so wraps up our 2026 coverage of the Prospectors and Developers Association of Canada conference. I have to say, it was the most upbeat PDAC conference I've been to, and I went to quite a few, beginning in 2012 all the way till 2020. It was wonderful to come back and see, again, the excitement in the air. It was just a good vibe. So a big thank you to all the guests, and thank you to the PDAC for having us at their wonderful podcast booths. And thank you, dear listener, for continuing to support this program. We look forward to returning to our regular scheduled programming next week. Until then, take care.